All right, time now for our chart of the day. We're going to stay in the theme of the Fed's historic interest rate hike, and we want to talk about the 30-year fixed-rate mortgage average. We got new data just this morning from Freddie Mac showing that the 30-year fixed rate getting really, really close to 6%. This is the highest, by the way, that we've seen since 1987. And Akiko, this is no surprise. Anyone that's been trying to buy a home knows that mortgage rates are phenomenally higher. Now, the Fed is maybe hoping that this is exactly what's behind perhaps price of homes actually going down at some point, but we know that supply is also an issue and the constraints that we see nationwide. I'm not really sure that's going to have the same effect, but either way you cut or slice it, borrowing costs getting more expensive.
Well, and you see sellers and buyers both kind of pausing and saying, well, is this the time to really be putting my house on the market? Obviously, that brings down the inventory. Yesterday, we saw mortgage demand, about half of where it was a year ago. But this really gets back to sort of the broader picture, right? When we're looking at the Fed's rate hikes in the real life impacts, what people are looking at. It's mortgage rates, it's, your credit card debt, it's car loans. I mean, all of that will take a hit now as a result of the Fed's policy. Yeah,
and what's really interesting is that from a stock market perspective, I mean, you see the movement going on. Obviously, none of the industries are really having a good time right now. But, keep an eye on the real estate space in comparison to the financials, because even though the Fed likes to say it doesn't have any sort of, industry by industry impact on things, when you think about mortgage rates going up, right, that's essentially just reallocating the income when it comes to the home buying process towards the banks and then away from realtors and the actual home builders themselves. So when you take a look at news cycles like, for example, Compass recently having company layoffs, well,
Redfin as well.
As well. This is a big reason for that, right? Because it's mortgage income that's going to the banks instead of to the realtors that are helping people find homes as that activity starts to come down. So very interesting to see how that unfolds, and who knows how much higher we'll expect to see the 30-year fixed rate go.
Yeah, a lot of people watching that number really closely.